Alright, so I know this video's been a long time in the making. It's took me a little minute to make it. You know what I'm saying? Take a little minute to make it. Let me maybe also like a tad smaller. Yeah, I think that's good. Y'all don't really need to see me. Alright, so I had to find my camera because I'm doing all of this on my laptop because it's gonna be a long video. Well, we'll see. We'll see how long it is. We'll see how long it ends up being. But you know what I'm saying? I couldn't get y'all the quality because it's not on my phone. It's on my USB camera that I bought for my laptop. Actually look pretty good. It actually don't look that bad. You feel me? It don't look that bad. Without further ado, we finna talk about GoldBach. Alright? Finna talk about GoldBach. Got a text from one of my folks that asked me about GoldBach. Alright, I'm finna get into it. So first, we're gonna go to the book. We're gonna go to the book. Because I have to give y'all some key information. It's very important. This is in my trading folder. Alright. Alright, let's see. Hopefully this whole thing records right. I'll have to restart. It's recording. Everything looks good. Everything looks good. Cool. I'm just double checking. I'm quadruple checking, bro. Alright, come on. Load, please. Alright. So first off, before I give y'all anything from this book, I need y'all to go buy this book from Hoopilaka. Opilaka. Hopilaka. Hoopilaka. Some people call him Hoopilaka. His name's very hard to say. As y'all see, I bought this. Literally, my emails are right here, but it's spelled wrong. I don't know why, but yeah, it's right there. I want y'all to go buy this book. It's a free book. I paid $12 because he just sells you like whatever you pay, it technically counts as a donation. Go buy this book for him. I'm only gonna show you guys 3 or 4 things from this book. I think because I've ran through this script a few times. I think it's like 4 to 5 pages. I'm only show you 4 to 5 pages out of this 189 page book for Opilaka because you guys need to go support him and buy this from him because he wrote this book and he gave it to us for free. So go drop 12, 15, $20 on this book and support him. Shout out to Opilaka. Opilaka. I'm sorry, I want to say your name right now. Hopilaka. Shout out to him. Alright, before you get into this. Alright. So GoldBach fundamentals. That's what this is. This tells you everything. Alright, so I'm gonna tell you everything pertaining to my strategy. I'm not gonna tell y'all everything that's in this book. Y'all could buy the book. You know what I'm saying? Because the book is literally like $5. You know what I'm saying? So you just literally type his name in or type in GoldBach book, be by him, and you just buy it. Okay. Alright, time to get into it. So that's not important. That's not important. Alright. So first we're gonna start with what it is. Powers of 3, we know what power of 3 is. Yeah. Here it is. What is GoldBach? Alright. So GoldBach is part of the oldest and best known unsolved problems in the number theory. Right? It deals with prime and composite numbers. Alright. It states that every even natural number get greater than 2 is the sum of 2 prime numbers. So 2 prime numbers add together to make a number for every number greater than the number of 2. Okay? You guys are in school, so y'all kind of know what prime numbers. Prime numbers are numbers that's not divisible. So like 7 and 7, you add those together, you get 14. 14 has 7 times 2, 14 times 1. You see what I'm saying? It's divisible by something. That's basically what a prime number is. All right. Now the thing that's cool about GoldBach is it's a partition. It has partitions. All right. A GoldBach partition. But I'm going through all this because this is gonna be actually like very important. So you gotta really know this. All right. A GoldBach partition are 2 primes when added together give you a result of 100. All right. Now where did 100 come from? We skipped a little part. Here it is right here. the dealing range will be represented by 100%. All right, so think of every dealing range that you trade within. You trade ICT. Every dealing range that you trade within is, you know what I'm saying, 100 equals 100%. So if you trade dealing ranges, then you kind of know like every dealing range you trade is 100%, right? The number 100 is a percentage of a range. A full range is 100%. Hence the number 100. So that's why we're using 100. That's why 100 is so important because 100 is literally full percentage. Feel me? All right. All right. So a GoldBach partition. Now, what is a GoldBach partition? That's two prime numbers, right? So the same thing is here. Two prime numbers added together that give you the result of 100. Okay, that's super important. 3 plus 97 equals 100. 100 equals the whole range. You see why these numbers are kind of important? All right. 3 plus 97 equals 100. That's just an example. All right. Now we're going to go down here. All right. So below are two prime numbers, or prime numbers, prime and composite numbers. All right. Here we go. Now the key prime numbers that you add together to get 100 are the ones that's depicted by the orange boxes. Okay. So say they have an opposite, or what's it called? I forgot what it's called. Oh my god, I just knew it earlier. I ran through this earlier. My brain's a little tired. They're basically opposite. I call it opposite. Is it adjacent? It's something. I'm sorry. I forgot the word. It has an opposite basically. All right. They probably have it up here. I'm gonna just say a partition. It has a partition. Okay. So 3 plus 97 equals 100. 89 plus 11 equals 100. 83, 17, 71, 29. There's that number y'all see me use all the time. 40. That number is very important. We're going to talk about the number in a second. Okay. 41, 59, 47, 53. You add any of those together across and you get 100. Okay. That's why 100 is important. And that's why some of these numbers are important because these numbers are key, have key points. Whether it's time, and it works for everything, time or price, or time and price. So you could use this if you're trying to do like kill zones and stuff like that. You can use this for time. You can use this for price levels. That's why this is so key. That's why you're always looking like, yo, I think you all of because everything you're doing is in tandem with the market equaling up to 100% of the range. Some crazy stuff. All right. So I think y'all got that. I think I made that very understandable. For example, this plus this, 100. This plus this, 100. All right. Cool, cool, cool. Now here's the partitions. All right. So 47 to everything back here is discount. Everything up here is premium. This is for levels. Okay. For levels. I'm teaching a little bit of levels, but mainly I'm going to be teaching time. But I'm just touching over just so you guys understand where this all comes from. Discount, premium. All right. They have it right here for you. Here's a partition. There's up to 7 partitions because there's only 7 additives that you could get to get 100. So 0 and 100, 3 and 97, 11 and 89, 17 and 83, 29 and 71, 41 and 59, 47, 53. Like I was saying earlier. So there's only so many partitions. These partitions also explain market symmetry. The low number together with the high number, for example, are 11 and 89 are symmetrically opposed to each other. So the opposite, okay? So it's the exact opposite. All right. Now you're like, bro, there's more prime numbers. Well, if you were really think this far, there's more prime numbers involved in this, right? Other than that, for example, 23. Why isn't 23 and 77? Why doesn't that count, right? That's because only one of them is a prime number itself, which is 23. 77 is divisible. 77 and 1, 7 times 11. So you have divisibility there. Same thing with 35, 65, and 77. Because you're thinking, why is 35 and 65 not 1? These are both divisible by 5. So that doesn't count. For example, 5 times 7, 7, 5 times 13, 7 times 11, like I just said, right? So you can't, they are semi-primes. I don't really pay attention to these because they're not the main GoldBach levels, and you don't really need no additional levels. So I don't pay attention to these at all. I was just talking about basically why not all of them are pertaining, right? All right, boom. Now we're gonna get into the nitty gritty stuff. Okay, like I said, I've only showed y'all this. It's been like 6 pages. It's gonna be technically 7, 8 pages. I think. Is there a page after this that's important? Oh, okay. So it's just putting it into the field. Okay, I'm gonna go back. So yeah, this is the last one I needed, and then we're gonna go back down. I'm gonna show you guys. All right. So each GoldBach number has a PD array. For example, I'm gonna do a by example. I like by examples. I'm gonna do a by example. In a by example, 0 is gonna be the low. Rejection block is gonna be rejection block, order block, fair value gap, liquidity void, breaker, mitigation, discount. This is all discount. This is all premium. Everything up here. All right. So this is all going to be in a book. That's what I'm saying. You guys need to buy the book. You feel me? So you can really study this because, yeah, the 7 pairs make up the premium discount levels. Each of these discount levels, this basically just cuts knowing what you need. You'll basically always know where you are in price because you'll know, okay, I'm at the low, so it has to be 0. So anticipating price go up to a rejection block, which is 3. It has to hit the order block. It's just going to go to the other side, which is 71 or 89, because it'll go from 89 from 11, because that equals 100%. So order block to order block. You see what I'm saying? Like you're going to always know where you are in price. Or you can see the trail of the partitions and see where price has been and where it's going to go, because it always has to equal 100. You know what I'm saying? So you have better indication of where you are in price, right? So yeah, this is very important. This right here is very important. When I get the book, it's page 26. All right. Now, this is the last thing that's important. The last thing I'm gonna talk about in this book, without you guys buying the book, because this is actually very important. All right. So pricing gonna move in 2 paths, which is the 2 algorithms that you see everybody that uses GoldBach do, which is with the levels and with time. Okay. Stay with me. All right. Levels and time. So you have blue path, orange path. I don't use this part. This isn't really important. These right here is the most important things in this book. All right, this is the most important things in this book. The example: see price touching different stuff. Dealing range. Yes, you have to read the book. There's other ways to get to dealing ranges and stuff. But yeah, when we put it in text, you get the following flow: higher low to order block, to opposite breaker, to opposite rejection block, opposite fair value gap, liquidity block. Okay, so it's literally telling you. We'll come back to this. Boom. This is the most important thing ever in this book. All right, these 3 pages, because I didn't know they actually tell you right here. I didn't read that part. But yes, you get the market maker sell models or buy models. The market maker X models, which is the buy or sell models. Then you get the trending models, because see how it's like you see how you could see it. Do 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 do. You know what I'm saying? Or do 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 do. What's it look like a trend, right? Same thing with market maker sell models. So it's going do 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 do. Take all of this, right? Same thing. Do 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 do. Break structure. If I got entry. Do. See what I'm saying? So you got a high, order block, break block, rejection block, fair value gap. The fair value gap in both of these models is the main entry point. Okay, that's what you're really looking for. The fair value gap. So you're not gonna do anything till you get to the fair value gap when you're beginning trading GoldBach because you don't understand all this yet. I mean, it's kind of easy to see, but you don't understand it yet. Same thing here. So do do do. As you see, the fair value gap to the next thing always gives you the biggest move. So fair value gap is where you always usually want to enter when it comes to this. And I know this looks kind of small. You're just like, what? But like, imagine you take this on a 4 minute. Imagine you take a 4 hour GoldBach fair value gap at this point to the liquidity void. It's always gonna hit the equal. The equilibrium is like a, I don't want to say 100% guaranteed, but like on this setup, the the what you call it, the equilibrium is such a high win rate. The win rate is dumb high. So you would probably want to take price to the equilibrium. If not, the equilibrium is like between, right here because it's 50, so it's between these two. So you take it to equilibrium. After that, you could just take it to, you can take the liquidity void all the way if you want to take it all the way there. But say you take this on a 4 hour, you enter on 5 minute, like that's a huge trade. That's probably like a 1 to 12 or something, 1 to 8, 1 to 5. Like you're getting a 1 to 5 minimum out of this. But that's what the power of GoldBach. This is like a, and you can use this on different time frames. Like you could use this on a 4 hour. You can use it on a small time frame. You just have to understand the dealing range that you're in. If you're on a small time frame, you need to have a smaller dealing range, obviously. So you need to understand your pairs, the dealing ranges, all of that good stuff. All right. All right. So I'm gonna tell you guys this with levels. I'm telling you everything we're here with levels, and we're gonna come right back up to this. I'm gonna tell you guys with time. All right. So levels. All right. So algo one, you got the higher or the low, and you see it's always telling you because you do it same thing with each side, buy or sell, higher or low to the order block to the same side order block, right? So the higher or low, come up, bounce down to the same side order block to the opposing breaker, which literally shows you to the opposing breaker because 47 and up is the other side of the curve. 47 up is the other side of the curve. So you're going from premium to discount to premium. See what I'm saying? Other side of the curve. 41 is the opposite of 59. So anything above 53 is discount. So here, boom, other side of the curve, breaker, opposite rejection block, opposite fair value gap, back to the liquidity void. So opposite fair value gap, back to liquidity void. And when you actually map this out, it's a do, 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 breaker structure. This is where the breaker structure or the switch or market structure shift and everything like that will happen. The fair value gap will be here. Entry. You can either take it to equilibrium, which is a way higher win rate, or it takes it to LV, which it usually hits the LV because it has to complete the actual model. So, all right, that's algo one. Algo two, rejection block to the same side breaker to the same side for value gap, and it goes all the way from the same side for value gap to the opposing order block to then the opposing mitigation block to the opposite liquidity void. So here we go. Same side rejection block to the breaker. So it's do to the fair value gap. So it'll be this whole push is gonna leave a fair value gap. That's your entry. Same thing with up here. On a market maker sell model, you have to wait for the shift and everything. Like the shift happens up here. It's your entry. Fair value gap is the entry for most of the time. Fair value gap, entry. And you see how far it goes? Fair value gap all the way to the opposing order block, to the opposing mitigation block, to the opposing liquidity void. So do. It looks like a trend. You see me? You feel what I'm saying? So there we go. How we doing on time? Trying to make this crazy long. Yeah, I'm doing something right now. I'm doing something. 20 minutes. Okay. Cool. We good. All right. So, boom. All right, now I'm gonna equate this all to time. So we get a pen. Get a pen and write this down for you. So it'll be easier for me to go back. So, all right. So for algo one, algo two, because I have it in my notes in my phone, so I don't have to read it. Yeah. So got a high. Oh, for algo one, I'm tweaking. Not a high. So you have 100. So you remember price goes 1 to 60. This is some good stuff. This is some good stuff. This is for time. Okay. This is for time. You can only have 60 minutes in an hour. Okay. An hour is 100%. All right. So I don't know. All right. Cool. Cool. All right. So 100 basically simulates the hour. Okay. 100 simulates the hour. For algo one. Whatever hour you're in. 100 or 00. So for example, 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock. That's 100. 89. You can't have 89 minutes in an hour. So we use the consequent. That's what it's called. This I was trying to get that told. The consequent. You use the consequent. What's the consequent of 89? The other value that's symmetrically opposed to it to give us 111. So 111. Can we use 41? Yes. There are 41 minutes in an hour. We use 41. Can we use 3? Yes. Can we use 17? Yes. We can use 17. Can we use 71? No. 71 is really 29. I hope y'all understand what I did there. Because same thing with this one. 89 is really 11. Opposite. Consequent, of course. It's a consequent of it. Symmetrical. We can't use this because time doesn't allow it. So you have to use 11. Boom. You got 11. Same thing with this. You can't use 70. You can't use 29. 71. So you have to use 29 because can't have 1 hour and 71 minutes. You know what I'm saying? There can't be 171 p.m. It's not right. You have to use. The algo ends with 29. All right. Now, y'all want to know 29? Here we go, bro. Here we go. The algo one ends with 29. Algo two. You can't use 97. There is no 100. You can't use 97. So you have to use 3. Can you have 59 minutes an hour? Yes. Can you have 83? No. The consequent, the equal consequent. 1, 2, 3. 1, 2, 3. Up. Right here. It's three below it. So it's 1, 2, 3, 4. I'm tweaking. 1, 2, 3, 4. Equal opposite. 17. Right? Can you have 11? Yes. Can you have 47? Yes. Can you have 29? Yes. What do both algorithms have in common? 29. You see why 29 is so important? Both algos have 29 person. So here's the numbers. I'm gonna put them on the screen later because we have to backtest and stuff. But here's the numbers. They both have 29. Okay. Hope that's clear. Actually, let me make sure. Yeah, I couldn't see it. I had to make sure. They both have 29. All right. I know you're like, bro, what? I didn't sign up for all this. Yeah, that's some mathematical stuff. I'm not gonna lie. All right. Hope y'all saw what I did there. I just showed you guys algo 1 and 2. Y'all can go back to the video, take a screenshot of it. All right. All right. Now this is for levels. Everything up here is for levels. So if you want to go study levels, buy the rest of the book. sift through some of this information. It's actually very good. Everything in here is, he doesn't ramble or nothing in none of this. He doesn't ramble or just do extra stuff. No. Everything in here is valuable. You can even toggle if you're a swing trader to the months. I don't know how that works because I'm not a swing trader, you know. But you could toggle it to the months. All right. So I think that's the everything you need from this book. I think I kept my promise. 1, 2, 3. That should count as one page. In the beginning 4. So that's 7. That was 7 or 8. Out of 189, I think I did good. Yeah, I gotta buy the book, right? For real. If y'all want the book though, y'all can email me or leave a comment. I'll give y'all the book. I'll email y'all the book. But please support my boy, please, and buy the book. All right, now we're gonna go to charts. We're gonna go to charts now. Go to charts. Episode 4. Also, I really don't want to have to do this whole video again because it's a lot. All right. I don't know why it's there. Ew, what you doing, man? You good? Oh no, do this. Okay. Hey, I had this computer since before COVID, like pre-COVID, guys. I'm sorry. Oh no. It's because OBS is running. I think. Oh my god, I can't even see my watch list. Oh, there you go. All right, change the pair. Okay, here we go. Yeah. Okay. So why is 29 so important? I'm gonna give you guys the logic. Now I'm gonna give y'all guys the logic. 29 is so important because that's the end of the algorithm. What happens when something ends? Something begins. Something new begins. So 29 is so significant because there's going to be another algorithm that runs after it's done. So it could be 111, 41, 3, 17, 29. Then another algorithm can start. So it could go to algo. It could go from algo 1 to algo 2. 3, 59, 17, 11, 47, 29. Right? Or it could go back and the algo could reverse 29, 17, 3, 41, 11, 100. It's a whole bunch of different possibilities. But the key thing you need to know is that every algorithm begins and ends with 29. Okay? Cool. Every algorithm begins and ends with 29. That's the key number you need, the only number you need, 29. Now, once you get more experienced and you want to start looking into like other stuff, you can do that. But you don't got to do all that right now. All right? So, how does this work? How do you get 29? I made a ChatGPT spreadsheet for you guys. Oh my god. Oh my goodness. I made a ChatGPT spreadsheet. I gotta go find it. This is Chattison. Of all the trade possibilities. I'm gonna show y'all that later, actually. I'm gonna show y'all that later. I'm gonna put it on my phone so I can back test, show you guys, but I'm gonna show you guys that later. It's not important right now because you don't understand. Alright, so how do you get 29? So that's the part that kind of threw me off and kind of hard for me to understand. But once you understand it, it's very easy because it's just one number. You're not looking for a bunch of numbers. So 29 is like, I think it's 3 ways you can get 29. All right. You can take the number at face value. Those are usually pretty strong. But lately I stopped doing that. So if it, say for instance it's 929. Oh, make sure too. The key thing for this, I'm so sorry. Before I even get started, everything has to be in military time. Everything. Everything for this is military time. Everything. Everything. See, 23 it has to be military time. Okay, that's the first thing. Military time. So you can properly add and subtract the numbers to get it. All right, now look. How to get 29? You get 29 in multiple ways. You can look at the number and it be 29. So for instance, say it's 929. Where is it at? Say it's 9. Say it's 929. You could look at the number 929. You could do 9:30. You could do 9:30. You know why you could do 9:30? You can afford 1 plus or minus the number. Okay, so 9:30 minus 1 is 9:29. So that's what's count. This would count. All of this could count as 29. All right. This is actually a really good trade. And if this was inversed, then this would be like a great buy. But it ain't inverse. It rejected. So that's why it dropped. Okay. But yeah, 29. So this is all the keywords you get 29. So let me go to another one. Let me go to my phone. I have everything in my phone. So for 8 o'clock, the times you'll be looking at are 8:20, 8:21, 8:22. Then they have a little gap in time. You would wait for 8:36, 8:37, 8:38. And after you miss those two windows, you have to wait again. You have to wait till 9:19. Okay. So let me tell you, I'm gonna show you guys. So I'm gonna go through this. I'm gonna go through this very slow. 8:20, right? 8:20. 8:20. Now why does 8:20 work? 20 plus 8. You can add the hours and minutes. You can add the subtract the hours from the minutes. You can subtract the minutes from the hour. You just want to use your mathematical skills to get 29. And I actually, I have a spread, like a little ChatGPT list of times. So you got to think about it. Or you just you can just do it. Put it in the chat and it'll give you guys the times. But 8:20, 8:21, 8:22. Now 8:20, if you add 8 and 20, you get 28. If you add 1, that one that you're allowed, you'll get 29. So that equals 29. 8:21 equals 29. 8 plus 21 is 29. Cool. 8:22 is 29. 8:22. 8 plus 22 is 30. Minus 1. You're allowed to minus 1. Add 1 or minus 1 or take the number as what it is. 22 plus 8 is 30. Minus 1 is 29. So you can use 29 here, here, or here. And as you see, it forms a low. It forms a swing low. If you guys trade ICT, you guys know what swing low is. Boom, low point, higher point. Swing low. You get a swing low, okay? Now, would this be a valid trade for me? No, because it didn't take any liquidity. Would this have been a valid trade to take? And would you have made money? Yes. Inverse fair value gap. Right there. The high was liquidated. Stop below the low. 1 to 2.3. Scalp. There's a scalp. These are scalp. This is a scalping strategy. Okay? We're on a 1 minute. All of this is happening on a 1 minute. Okay, did that make sense to you? All right, now we're gonna go to them other times I was saying. 37, 36. Okay, 8:36. 36 minus 8 is 28 plus 1, 29. 37 minus 8, 29. Cool. 38 minus 8, 30. Minus 1, 29. Cool. As you see, another time, another swing low. Cool. So you see how we're using the times to get this. And you get trades every hour. Okay, I'm gonna keep it a buck. That's why you don't have to force any. If you like, for instance, how you're seeing like none of these are taking liquidity, don't trade these. Don't trade. Only trade the perfect ones. I only trade the perfect. That's why y'all be seeing me post a lot of wins. I only trade the perfect ones, bro. If I don't see liquidity swept and if inverse fair value gap, I'm not trading it because it's not a point. You're just gambling at that point. It's no point because you could just wait another hour. You wait another hour, you get 2 opportunities per hour, except if it's 12 o'clock. If it's 12 o'clock or 1, let me see. If it's 12 or 1, like London session is a little weirder because the times are like a lot closer. For example, 3 o'clock. No, I'm doing 2 o'clock. So at 2 a.m. for London, you have 2:26, 2:27, 2:28, 230, 231, 232. Like all of that's like clumped together. So you have to be more cautious there, right? Because I mean, the times the just in terms of math, the numbers are like, that's how close the numbers are. All right. But for New York, it's a lot more space, as you see. You actually have like a gap. So actually, if you like that better, you should trade New York. I'm not gonna lie to you. But yeah, I'm gonna try to find an example now though of a stellar trade that I would take using this. But basically, yeah, you use these numbers to get the algos. So where's 29 at? So you had 29 all of here. And basically where every key low is. So here's a good example. What's this part of it? 22. 22. The algorithm could start a new algorithm, jump and start a new one, or it could go backwards. It could do a whole bunch of stuff. You just gotta kind of like go what you got. That's why I don't trade. You know what I'm saying? Trade it like that. So seven, we just said it would be 720 something. 721. So this whole part right here, 20. Oh no, 21, 22, 21, 22, 23. So this whole low. Hmm, nothing key there. 48 minus 1. So this is it is a backwards algorithm. 29, 40, 47, and 11. This is around 11. It's not exactly, but it's around there. And 17. Cool. 59. And then that's when the algorithm kind of stopped. And 3. Into the algorithm. You see what I'm saying? Like, you'll know basically what price is, and you can be like, okay, well, we're going to continue trending, or like, you know what I'm saying? You use the numbers to kind of tell you. But 29 is the most important number because that's also where you get the biggest moves. So that's why I use 29 as well. But let me go ahead to London. Let me go to London. Let me look at London. I'm trying to find a good example. I haven't seen nothing really that I like though. Did I take any trades last night? Oh yeah, no. Last night actually wasn't the best trading night. Um, I usually like the low to be one of those three numbers. So if a swing low forms using those numbers, then I'll consider it as a key low, pretty much. So say for instance, like here, like 130, 131. So I would use this key as a key low right here. This is actually a trade I took. All right, so 130. 30 minus 1, 29. 131 minus 1 is 31 minus 1 is 30. Minus 1 is 29. Right? So I would just use like this area because these are this is the like the low. Cool. So I got that. Did we take liquidity? Yes. This is actually a trade I took last night. Took sell side here. Boom. Cool. We got our numbers. Cool. Cool. All right. And we got an inverse fair value. Cool. So where we enter? For the inverse, with the fair value got inverse that. So I entered, stop this low, you can target it, these highs. These relative equal highs right here. See it wicked all the way through, easy win. These are like small scalps. That's what this is. Sometimes you do get the moves like this, but they're small scalps. Alright, so boom. Got through all of that. Alright. And that's kind of like how I use this. I know I don't have that many examples. I'm trying to look here. I don't have that many examples right now. But I've touched on all the information now, though. Now I'm going to go through a little bit of logic. Okay. The logic behind this. So, the reason this is such a high win rate strategy, you're using the time. So 29. So you're using the end of an algorithm. So an algo ended, and what is a fair value gap? A reversal pattern. So not only are you using a strong reversal pattern, you're using a strong reversal pattern at the end of an algorithm. So the algorithm's ending, and you're using a strong reversal pattern. Does that kind of make sense of why it's so strong? So algo 1's ran, or algo 2 has finished running. Now you're getting an inverse fair value gap, which is a key reversal pattern for a new algorithm to start. So now you're getting in when the algorithm starts, and you're letting price just run wherever it's going. So that's why you get such big moves, and that's why this is such a big like deal. 15, 1530, like here. So 1529, 1530. This is a good example. So this would be a great example. So look, what happened here? This is actually one I just caught out the blue. That was it happens it's so many trades throughout the day. So yeah, sell side. Six sell side here. Right? You have your reversal as well as your time pattern. You have your time pattern in reversal. 29. 29 was here, the low. 29 was the low, and you took sell side. So algorithm just ended. Whatever algorithm this was running here ended. So what is this? Market maker sell model, right? A market maker sell model. Look at this. That's all that this was that ran from almost the beginning of the hour. So almost from the beginning of the hour, this ran, and the algorithm ended here at 29. You could literally see this. You know what I'm saying? The algorithm ends. What happens? You have a key reversal. Move! You have a key reversal at the end of the algorithm. A literal inverse fair value gap. Closed here. Probably shouldn't come back to the inverse. If you really want to be, you know what I'm saying? You really want to be safe, you can put it underneath the wick, but price shouldn't come all the way back down there. And even if it does, it has this gap to respect. So you got a lot of like cushion. What can you do? Target buy side. You can literally leave it here. Boom. Great trade framed out. Literally something I would post on my story. Literally something I would post. Just like that. 29. Sell side's taken. Targeted buy side rated. And it actually took all of this buy side, which is actually funny. It came up and ended up taking up all of this buy side. So if you just like trode your stop and just let it run and everything, this would have been a great trade for you. You know what I'm saying? So that's another thing with this. You got flexibility to let them run, trade your stop. Like it's really all up to you what you do, and up to you to personalize. But this is basically the strategy. This is some of GoldBach. This is GoldBach in terms of time, in terms of scalping. People use GoldBach in levels and everything like that. That was a great trade example. I'm glad that popped up like that. So I kind of show you guys like what I'm looking for. But that's the logic behind it. Basically, this whole market maker sell model ended here at 29. 29 is a key point in time. Ended. Well, here we had a swing low form, a beautiful swing low form at 29. An inverse fair value gap happened at 29. Literal displacement through the inverse fair value gap. And the right when it closed, target buy side. Or you could have literally targeted where this went to, this fair value gap. This fair value gap that's low key at, it's at 3. Yeah, this fair value gap that's right here at 3. So you got 3. I mean, we don't know what algorithm this is. Anyway, there's a key point here. I don't think that's a time though. 36. Yeah, that had no key point. That has no point in time. But anyway, that's a key point, and then takes it out. Yeah, I'm not really good with the other numbers yet because I don't need them or trade them. So I'm not good with the other numbers. I'm not even gonna sit here and cap you. I'm not gonna sit here. I know everything. Yeah, no, I don't. But algorithm could be starting here at 16.00. Right? That's doing is doing. See, key point here in time at 11. So 10, 11, 16 plus 16 with 36. So it's not quite 41, but it's 36. 41 would be somewhere near 25 minus 16. That's 9, 7. That's 17. And then we have 29 somewhere around here. So this would be like a the algo 2, which is trending. You know what I'm saying? So yeah, you kind of get what I'm pointing at. But that's the logic behind it. A reversal pattern happening at the end of the algo. That's why this is such a great strong strategy, and that's kind of sort of what it is. All right, before y'all go, if y'all made it this far, I got something for y'all for watching this far. Hold on. I hope this is very informational. Um, hold on. Okay, hold on. Let me go to chat. I'm gonna go to chat up here. Am I logged in? I am logged in. Okay, cool. Go, go back conjecture. Whatever it's good. All right. All right, so I typed it in. Can you make a list with the same conditions, just with the allowance that you add add one or subtract one of the of needed in addition to the conditions already met? What update conditions allowing for a +1 adjustment on the sum or difference? You now have 140 military time combinations that satisfy. What's 140 divided by 6? You get 5 to 6 hours. I'll do 5. So you get 28 opportunities a day. It's 24 hours a day, but you get 28 opportunities with this. Okay? You only need to trade like 4 to 5 hours. I'm telling you. I trade, for example, from 1 till 4. Or sometimes 1 till 5. You feel me? You're gonna get a trade, you're gonna get a potential setup every hour. Especially if you trade multiple pairs. I trade 4 pairs, so I get a potential setup every hour. You're gonna get so many trades that you're not gonna take them all. But these are the times. Oh, it's not let me see the file. You send. Okay. I don't know. Ah, it's not working. I'm trying to show you guys this. So these are all the times that make 29, pretty much. And then I added the conjunction of plus or minus a minute, of plus or minus the hour and everything like that. I went from 47 to however many this was. And then it ended up being 140 when I did plus or one adjustment to the minute. And it started giving you like a pool of different times, pretty much. So yeah, you can just put it in ChatGPT. Here's the prompt. I don't know why it's not doing it for me. I'll do it. Actually, since y'all are here, bro, I'm gonna do it for you. Because I don't know why it wants to be. Why it wants to act like this. Oh, now you want to work. Hopefully, this is the right one. Okay, yes, it is. All right, here I go. So literally, I have this in my notes on my phone. In my phone, so I just go through the times as I'm literally trading. But you literally have all these different times in the day. All these different times in the day. As you see at 12, you only get like this one pull, so I just don't trade 12. I just wait till 1. So I trade from 1. So all of this happens by the time I'm done trading. I got trade 1, 2, 3, 4. And boom. That's how I get it. So yeah, I hope this video helped you guys out. I hope this explained a lot. Um, Thank y'all for watching. Thank y'all for tuning in. You know what I'm saying? And good luck. If you have any questions, leave them below in the comments. Happy trading, bro.